Prices of everything are soaring higher every single day, it seems. We can blame the central banks, we can talk about the restrictions and lockdowns having an impact on the supply chain, we can also discuss the logistical problems over the last year or so. But what if part of the problem was not inventory and shortages, but was more about price gouging and schemes to push the prices higher? Does that interest you? Well, you came here for the truth, so let me unveil that for you. This is a little bit of an investigation. I wanted to bring you this information because I think it's really serious. I think this is really hitting the nail on the head because you're being told one thing and then you look into the information just a little bit deeper and start to bring up some new data. And that's what I'm going to give you right here. So we're going to look at this through the lens, particularly in one extreme scenario, and that is the real estate surrounding Toronto, surrounding Canada. But I want you to know, and I will highlight this specifically, how this relates to basically every major city, especially the major cities in the United States. I know I have most of my subscribers from the US, and trust me, I'm always thinking out of that lens as well. You need to focus on what's happening here with the central bank activity. That is absolutely critical. But at the same time, we need to look at every single level of this. The mainstream media is telling you one thing, and certainly to a degree it is accurate. I'll give you more information on that. But we must dig deeper. So let's go. I wanted to start by talking about inflation as it relates to the central banks. Now, you have seen the Federal Reserve suggest very clearly that they will not be increasing interest rates at least until the beginning of 2024. So all the way through 2023, interest rates will remain at zero. But the Bank of Canada has done something very different. The Bank of Canada sent out a warning to investors this week that inflation still matters. In a surprise move, it accelerated the timetable for a possible interest rate increase and began paring back its bond purchases. That made Canada the first major economy to signal its intent to reduce emergency levels of monetary stimulus. This is a big wow. This is really something that, as far as I'm concerned, you do not hear at all. And of course, this is very minimal, but at least it is already acknowledging something that we were not expecting for a long period of time. And that is partly forward guidance, how they talk, their forward guidance, but also some activities. Now, the tapering effect, like I said, minimal, but it's important to see what they're saying because we are getting inflation on all levels. The quantitative easing is inflation of the monetary supply, but of course we're seeing prices rising considerably. And then we have this. At the bottom, the chart first, you can see Liquidity Shot. Bank of Canada buys a record amount of government debt, just like every other major economy around the world. Quote, based on the bank's latest projection, it is now expected to happen sometime in the second half of 2022. That's when they actually believe this is going to occur, the big moment of increasing interest rates. Federal Reserve, not until 2024. In case of Canada, the expectation 2022. We'll see. We don't really know, of course, but this is something that people should be paying close attention to because everything is going to flip once we start having these major economies increasing interest rates. And I have said this before, but I believe that now the danger zone in the US is 0.75 to 1.0 for the Fed funds rate. This is the danger zone in which we cannot get any higher without collapsing. And actually, right in that range, looks like it's about to collapse because it would be too much of a restriction. Just like last time they brought it to 2.5% approximately. So my assumption is this time you got about 0.75 to 1.0, and that is a cause for concern. So I'm going to go through these really quickly as we move through. I want to essentially cover the data and then give you why I'm giving you this data. The trouble with bubble, why Canada's red-hot housing market is defying the burst. Soaring real estate prices can have serious economic consequences, but the market incentives that drove them there aren't likely to go away overnight. And that's absolutely true. You cannot necessarily just pop a bubble when you've got extremely low interest rates, when there's no indication that things are really going to change much in the near future, and that you still have people in this euphoric stage, right? What's going to actually make that change? At this point, the buyers are saying, I'm just going to keep buying. I'm just going to put everything into this because I don't have another choice. That's sort of the sentiment right now. It's not just the houses themselves, but what makes up those houses. And of course, we have oil and we have industrial metals and all these other things. The price of the stuff that makes everything is surging. Global economic rebound is fueling a blistering commodities rally. The price of raw materials used to make almost everything are skyrocketing, and the upward trajectory looks set to continue as the world economy roars back to life. I want to make it very clear. I believe it was Goldman Sachs that said this is the beginning of a commodities super cycle. And if you look at the charts, I've shown them here before, essentially they've bottomed out and things are moving up. Will it be something like we've seen 2007 into 2008? Will it be somewhat like 1970s with oil? It depends on what the certain events that will unfold over the coming months and years. But this is something that would really hit people hard. Now, I want to bring one point about that in just a second, but let's take a look at the data first. From steel, copper, corn, lumber, commodities started 2021 with a bang, surging to levels not seen for years. The rally threatens to raise the cost of goods from the lunchtime sandwich to gleaming skyscrapers. And they basically just go on more and more. They're telling you this is because of the reopening. And to a certain degree, of course, whenever you're going to have reopening, whenever there's a big lockdown, there's going to be demand that was pent up. And so people get out there, they start buying. But is that really the only reason? Here you can see the charts. Corn, copper, aluminum, lumber, all of them are soaring, okay? All of them are soaring. And, you can make the excuse for some of them. Corn happened to be really high during that period, 2013, 2014. Copper was also relatively high during that period. But look at lumber, look at aluminum. They're starting to already go to highs we have not seen for a very long time. Lumber at a record. Many others actually are at a record today. And it seems like there's no stopping it. Commodity dependence. Developing countries tend to have a greater share of commodity exports. And of course, right now, if the prices are rising, this looks really good for them. And they have to be able to worry about these logistical issues that are somewhat of a problem. It depends on what countries go and where and how long it takes to transport and this and that. But I think it's important to understand who really stands to gain. Before I get to the Money GPS insights, I wanted to show you this here. It's out of Bloomberg. For an idea of exactly how strong the fundamentals are for commodities such as metals, agriculture, and oil today, consider this. These markets are now showing the steepest backwardation in more than 14 years. And they explain that here. That is, the premium for commodities that can be delivered now versus later into the future is at the highest it has been since at least 2007. And we know what happened with a lot of these commodities 2007 into 2008, signaling just how strong the world's demand is for raw materials and how tight the supplies are. The world needs more commodities. Shortage of commodities that pushed the backwardation nearly 15-year high, as you could see right here on the chart. Now, I think it's important, right? If you look at commodities, if you look at what's happening, they are something that for a lot of them, you can't live without. I mean, there are these certain grains that are feeding people. They're feeding the livestock. This needs to happen. It is an absolute must for, food and shelter, these basic things. So if you see these assets as something that through the investor mentality, it changes the way we look at this information. And that brings me to the Money GPS insights. You have to understand if this is actually the case and there is going to be more reopenings and the economies are going to grow and there is going to be more demand for everything, then you have to understand what's going to happen, who's going to benefit from these particular situations. I believe that if Goldman Sachs is actually suggesting the commodity supercycle is on, and these commodity prices, which have already gone up substantially, but are technically, if you compare them to tech stocks and you compare them to a lot of these other industries, sectors, you are going to see the prices continue to rise higher and higher. They are subdued in price in comparison to the others, so they have a long way to go in that respect. But you put sort of the fire under the feet as a result of this, with the demand and so on, the prices can go much, much higher. You can get into ETFs of agriculture, ETFs of oil, ETFs of whatever, different things that you think are accurate and based on these fundamentals. Or you can look at particular companies that might benefit from the agriculture, companies that are going to be outputting different raw materials and so on. These are different ways that you can take advantage of this under the assumption that these prices will continue to rise and the demand will be there. This article right here out of the Financial Post was actually very good. Okay, I'm only going to cover one part of it, so don't take this for the whole thing. There's a whole article written about it, but he made this point, and it's something that I see all the time. This happens to be Toronto again because I'm focusing on that here, but understand this applies to basically everywhere. They keep telling you the supply is tight, inventory is limited because they show you the charts. Oh yeah, inventory is limited. That's why the price is going higher. Look, if you have a very, very specific location, I want it at the corner of this street and this street in that block, and I'm waiting for a house to come on the market, yes, then inventory is limited. There's only so many houses in that area. But if you have a general area you want to be in, there's always opportunities. There's always opportunities, okay? What actually happened on the supply side in the Toronto housing market? A total of 230,000 dwelling units were completed over 6 years. Population had increased by 556,000, assuming household size remained at 2.8 persons. The population increase required 198,000, so less than 200,000 new units. The supply of new units was more than enough to accommodate the growing population. Moreover, the housing stock was further augmented by renovation and tearing down old houses to be replaced by larger, newer houses, both of which have been booming in Toronto. Residential real estate investment, which includes both new construction and renovation, has been a rising share of GDP. There is thus no problem on the supply side of the Toronto market. Of course, more supply will reduce prices slightly, but the Toronto price escalation is not caused by supply problems. Now, of course, we're looking at one indicator, we're looking at one fact here, but understand that there's much more in this article, as well as just more information out there in general. This, I think, is really important, but I also wanted to show you this. It's one video, granted, but I think everybody should see this. So you're looking at train loads of lumber just stacked up. Why? So I can't show you the actual video itself, but you can type that into the search here and get that information, or you can simply go to the link in the description and you'll see it for yourself. But you can see he's at the train yard right here, and there's all kinds. If I forward through, you will see how much lumber there actually is in the area, and he's saying how strange it is and so on. This right here is just one example, but that's a lot. That's a lot. Now, it could be the situation where this is very normal, this is very typical, but I'm seeing a lot of wood right here, and I've got questions. That's all. Is this just price gouging or partly price gouging? And a bunch of different factors all adding up? You can tell me if you know any other information. If you got any other resources, definitely post them in the comments. we've got this right here. Bad things happening in Ontario real estate market as homebuyer complaints surge. This particular individual in this article here, as well as this one, tighter mortgage standards, blind bidding ban may be needed to slow the housing market. That's according to the National Bank of Canada's CEO, okay? So they know the problems are here. Look, there's all kinds of things. Blind bidding. For those who don't know what it is, you cannot be able to determine what's happening with the bids currently. So let's say there's, you talk to the agent says, oh, there's another 3 bids. Okay, what are they? Well, they're higher than the asking price. They can't really tell you exactly what the price is. So it's $1 million, let's say, and you really want to get this home, but you don't know what the price is. You really don't know what that offer is. So you say 1.1. In this previous example I was just showing you, the person offered a price that was very high, and then the agent said, well, you got to offer more or else they're not going to take it. So they said, you know what, forget about it. We can't afford it. Then they found out that the actual, as the property sold, they found out that home sold for even less than their offer. So they are lying, they are cheating, they are stealing their way to higher and higher prices. Why? Higher commissions. But at the same time, they're doing all these funny things, and it's allowed to happen. Yes, you might burn a real estate agent here or there, but the problem still exists. It's rampant today. This is crazy. There's speculation on all levels. And just for fun, I wanted to show you this. Costco paper towels now with 20 fewer sheets per roll. Oh yes, that's right. You weren't kidding. You weren't imagining things. Just like the toilet paper that continues to shrink and get thinner. It's happening right here in Costco, and it went from 160 sheets down to 140 sheets. That's an inflation rate of 8.75%. 8.75% right there. Imagine if they tried to increase the price by 8.75%, what they would do. Of course, people would say, forget about it, but they just shrink it. The shrinkflation is real. And I know I've gotten so many examples of that. If you want to share some of those examples, please do in the comments below. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. Simply by clicking a button, you help me out. Thank you. If you want to learn about e-commerce, you can do that for free. Unlike the other guys, I'm teaching you right here in this course for free. There's nearly 10,000 people in this course here, and you can get it right now at the AmazonGPS.com. If you want to learn about the everything to do with the economy, financial system, all of that is located right here. Check it out at the link in the description. Have you seen this? If not, you absolutely want to check it out. So you got to click right there, and I'll see you on that page.